While this is still a competitive market and prices remain elevated, there is a fundamental shift that is taking place in the real estate market right now. There are fundamental shifts that are taking place in the real estate market. There is a big increase in the number of listings available. Homes are sitting on the market longer, and this is all with less than 2 weeks to go before the Fed's rate policy decision. Now, in this video, we're going to deep dive into this latest data. We're going to discuss what it means for the economy and, more importantly, what it means for you and me. Now, before we get started, let me just say that if you like content like this, leave a comment down below letting me know what you think. Make sure you subscribe for more content like this and hit that thumbs up button for me. Nationwide, there is a 36% increase in the number of active listings in August compared to the same time last year. Now, this is the 10th straight month of growth, but also this is 26% lower than August of 2019, which is the last August before the pandemic. Interesting to note, there are fewer new listings that are going up. This growth in supply is happening because homes are sitting on the market for longer. And it's interesting to see this trend unfold because, for the last couple of years, homes were selling like hotcakes. I remember in my market here, if a home went up, it was typically a day or two before you had a contingent offer on the table, but things are starting to shift. While this is still a competitive market and prices remain elevated, there is a fundamental shift that is taking place in the real estate market right now. Now, sticker prices are still historically high, but this summer it has been common to see homes sit a little longer. Price cuts are more common, and even asking prices are starting to taper off. Now, this is a welcoming trend because for the last couple of years, prices were only increasing. Honestly, people that were getting in on the market, that were buying homes, were buying them for ridiculously high prices. And from the time that I bought in early 2020 to the time right now, just prices in my own neighborhood have close to like 100% increase in the last couple of, just crazy. The real estate market has been so hot, but we are finally starting to see it go in the other direction. With homes sitting on the market for longer, you could start to negotiate pricing. And a lot of times, if homes are sitting, let's say they sit for weeks, months on end, well, at that point, you typically see these price cuts starting to come in as people are trying to sell their homes and move on to wherever else that they are going. That is just something that we did not see for the last couple of years. It's normal for it to take place, but to see it happen again is just a welcoming thing for a lot of buyers. And this trend is proven to be even stronger in some of the hottest real estate markets over the last couple of years. Now, Miami, Florida, Tampa, Denver, San Diego, places like that, there's around a 60% increase in the number of inventory from this time last year to the year before. Now, these are some of the hottest real estate markets. Think about Miami in particular. Prices have gone up so much down there. It's become, just like a different world than the Miami that we had 5 or 10 years ago. But it is taking longer to sell homes, and the market is just changing as a whole. Prices are starting to go down, and again, a welcoming trend for a lot of buyers that are in on the market right now. And this is an interesting time for the real estate market, with the Federal Reserve set to cut interest rates in a couple of weeks now. Now, this is going to have a trickle effect on the real estate market because mortgage rates have already sort of dropped a little bit recently in anticipation for what the Fed is going to do. And the Fed is going to be cutting interest rates. Now, the Fed rate cut doesn't directly change mortgage rates. I made a video recently about the Fed fund rate, what it is, how it affects the prime rate, how it affects mortgage, auto credit, and other rates. So if you're interested in that and what these Fed rate cuts are going to do on other rates, you could watch that video where I explain it in details. But in summary, the Fed is going to be cutting their key rate, which is going to have a trickle effect on mortgage rates. It's going to go down, and there is an people that think that the Federal Reserve is going to cut rates a few more times towards the end of the year. Now, that is not a given. The Fed has talked about cutting rates in September. We pretty much know that that's happening. But November, December meeting, a lot of people do anticipate for the Fed to cut rates during that time as well. I do think that it's going to happen, but just know that it's not a given. But that will also have a bigger effect on the real estate markets as mortgage rates continue to go down even further during that time. There's a lot of buyers right now that are sitting on the sideline. You had a whole bunch of people when prices were going up, buying houses, trying to outbid each other, going well above the asking prices, and it was a good time for sellers. People made a lot of money. But now you also had a whole bunch of buyers that were like, screw it, I'm not gonna be paying the, and they just kind of sat around. They saved money. They might have stayed in their homes. They might have, continued to rent or whatever their situation was. But a lot of those buyers that were sitting on the sideline for so long, they see these current trends where homes are sitting on the market for longer. Homes are starting to see price cuts happen, but they also understand that rate cuts are coming. So mortgage rates are going to be more favorable along with these lower prices right now. You're going to have buyers that get back into the market. And that's why I say the current trend that we see right now, we don't necessarily know if it'll continue when the Fed does cut rates. Now, it is welcoming to get this little bit of relief for buyers, but when more buyers start to get in, because you have to understand, yes, there is an increase in active listings, but the inventory is not going up. You just have less people that are putting in offers that are on the market, but we can anticipate that a lot of those buyers will start to come back as rates are lower, and this current trend that's going on right now. Where that's going to lead the real estate market, after September, after potential November and December cuts, we don't know, but understand that there is a fundamental shift that has already started to take place in the real estate market. We don't know if the current trend is going to continue, but with what the Fed does with interest rates, the real estate market is beginning to change. If you like content like this, leave a comment down below letting me know what you think. Make sure you subscribe for more content like this and hit that thumbs up button for me.